Korea's leading unicorn startups have crossed a significant threshold. After years of chasing growth at the expense of profits, 2025 marked the year many of them demonstrated that sustainable, revenue-generating business models are not just possible, they are real. 6 unicorns now sit above the $1 trillion annual revenue mark. TOS 2.698 trillion won, Curly 2.367 trillion, Megazone Cloud 1.749 trillion, Dunamu 1.557 trillion, Musinsa 1.467 trillion, and Yanalia 1.029 trillion. Two of those, Megazone Cloud and Yanalia, are new entrants to the club compared to 2024. Revenue growth was broad-based, with only Dunamu posting a decline, down 10%. Amid a slowdown in crypto trading volumes tied to global economic headwinds. At the other end of the spectrum, Carrot surged 43% and TOS grew 38%. Both standout performances in a challenging consumer environment. Curly and Reedy grew at a more modest pace, 7.8% and 7%, respectively, but both companies made meaningful strides in cost discipline, translating modest top-line growth into significantly improved bottom lines. The most closely watched development was the profitability turnaround. Curly and Megazone Cloud both swung to operating profit in 2025, a milestone that had eluded both companies for years. Sigbang has not yet crossed that line on an annual basis. It reported an operating loss of 28.7 billion won for the full year, but it recorded a standalone operating profit of 300 million won in the first quarter of 2025. A meaningful signal that a full-year turnaround may be within reach. However, not all profits are created equal. The gap in operating margins within the unicorn cohort is striking. Dunamu continues to operate at a level most companies can only aspire to, posting an operating margin of 56%. Despite a year-over-year decline in absolute profit, from 1.186 trillion won in 2024 to 869.3 billion won in 2025. TOS delivered an operating profit of 336 billion won at a 12.5% margin, while Musinsa posted 140.5 billion won at 9.6%. By contrast, Curly's operating profit of 13.1 billion won translates to a margin of just 0.6%, and Megazone Cloud's EBITDA margin sits in the low single digits. Both companies deserve credit for reaching profitability, but the distance between their margins and those of peers like Dunamu and TOS underscores how much work remains. Dig into the drivers behind the strongest performers, and two themes stand out: advertising revenue and international growth. TOS, Carrot, and OHAUS all flag. Advertising revenue is a primary engine of improvement, a sign that these platforms have built audiences large and engaged enough to monetize through ads at meaningful scale. For companies with established user bases, advertising is emerging as a high-margin layer that can be grown without proportional increases in cost.